Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. I hope you're having an amazing day. We're going to take another look here at Bitcoin, help understand best practice and big picture, and see what the hell's going on this weekend. It's an interesting weekend. Normally we don't see this kind of red. Expecting in the last 5 weekends in a row, we've seen green Saturday and Sunday. And today in ST, of course, bloody red. So we're going to talk about that and explain kind of why that happened and just kind of take a look at the volume, make sure we understand best practice. Also, of course, big picture, the whole 9 yards. If you're new to the channel, I'm not a financial advisor. Love teaching people to trade. Hope you can learn something here today. My goal is to help you become a better trader. So if that is a goal of yours, CryptoCache.tech is a site. I have a trading academy to teach you what I know, as well as a signal group to kind of help you structure your trades so you can take, effective trades. We've been hitting good, 80 to 100% profits recently on a lot of our leverage positions to the downside. So keep in mind, shorts are definitely in play right now. I would not take a long right now. It's not the best market for that. So simply put, be cautious and careful in this environment that we're in right now. Also, too, if you do want to become a member, I do offer discounts for military and third world countries. So message me direct if you have any questions. My contact information is down below in the description. All right, so let's go ahead and see what's going on here. So let's go ahead and take a look at the monthly first of all, kind of just big picture, and help understand that, hey, this is not looking fantastic. it's a red month, but if you look in the history, we can see 3 red months followed by an increase, 3 red months followed by a moderate increase, followed by 3 more red months. Okay, so there seems to be somewhat of a cyclical pattern here with Bitcoin. We have 3 strong months to the downside, and typically somewhere in the range of 2 to 6 months to the upside. Does that mean that next month is going to be green? Not necessarily, but it does give us the indication that that might be a possibility. Okay, so again, something to think about. Another thing to recognize too is that we're getting closer and closer to this moving average as we've been expecting for a while. It's trending right around 21,600 now. By the time the price gets down there, it would probably be average about 22 to 24. So I would expect 24,000 to 20,000. I know it's kind of a large range, but that should be the bottom for Bitcoin here, because once again, it was a previous all-time high, and the previous all-time highs established themselves as new lows. That's a very common characteristic. So just know that we have, you can't see it on the larger time frame here, but right around 20,000, right in this range here, is roughly where the price action hit its highest point before it took off. Okay. So again, just something to kind of think about there. Now, taking a look at the weekly, very similar scenario here. We're underneath the 20-day SMA, but above the 200. The 200 will work as a support level, and that's trending around 22,000. So again, the 200 on the the 200 on the weekly and the 50 on the monthly are very synonymous in a lot of ways. They're telling us the same thing, that the price, if it were to come down, should likely test that level. And if it were to, we should expect the price to hold above that. I think a price point lower than 20,000 is very unlikely. Once again, world climate, the whole 9 yards, all that stuff factors in, and we need to kind of recognize that. But with that being said, from the technical standpoint, we shouldn't experience a price point lower than 20 to 24,000. Again, I know it's a large range, but that's just kind of where we're at right now. All right, taking a look at the daily. This is something that's really important to understand. First of all, the price didn't recover like a lot of folks expected, including myself. And the main reason why is because the Fed meeting, I believe it's going to happen this week, as well as the CPI data that released. We were 0.3% higher on inflation, and it's just caused a big ripple. That is going to likely gap the traditional markets down on Monday, which we actually had a gap down on Friday anyways to start this whole process. So a lot of those things are kind of coming to a head. And this is going to be an interesting week. So again, I recommend taking very few positions at this point. It seems like, yes, a short position is an easy win, but not necessarily. Same with the longs too. Like, is the price just really going to bounce right back? Well, let's go ahead and take a look. So taking a look here, of course, at the RSI, we're not even overextended yet. So truth be told, we could very well see more downside. Okay, so keep that in mind. Doesn't mean we're out of the clear yet just because we've had 6 days of red. Right, we can see anywhere between 9 and 13 days on average is the standard for continuation to whichever direction. So again, if we go on kind of the law of TD sequential, essentially telling us that we should hit a 9 and reset, hypothetically we've got 3 more days of red, which does put us pretty darn close to the meeting next week. So again, we could very well see that. So again, it's hard to speculate specifically what's going to happen next in that regard, but those things do factor in, and just the overall sense in the climate right now is deteriorating and not looking good. Therefore, we can anticipate the price going down versus coming back up. But again, there are some overextensions and stuff we want to pay attention to, and we'll look at that in a moment. But we do have a MACD divergence here on the daily, really just telling us that the bears have gained control. So in other words, this bullish momentum we saw recently, this slight little recovery, it really isn't anything at all. In other words, when the price came down here effectively to try to ramp itself back up, this has lost its momentum and the price is now digressing. So again, it's not a guarantee the price is going to go down, but it's more likely that we're going to see the price decrease in value than we would see it increase in value. All right, so just something to kind of consider there, of course, on the daily. Look at the 4-hour. Another thing to also recognize, we're underneath all moving averages. I think we knew that already, but that's never quite advantageous. Again, we ultimately want to be back up over the 50-day SMA on the daily, and we're way far away from that. That's that descending pattern that we're seeing here, and the 50 is working concurrent with this line here. All right, so until we can break back up above, we have no leg to stand on. Good news is we saw a decent amount of volume this morning where the price action increased. And of course, we may be able to see the price stabilize at this level, but we need to also recognize that this level here at about 28,600, that was a key level support that we lost. Now that we're underneath that, it's going to be a key level resistance. Okay, so 28.6, I'd be willing to guess or speculate heavily that the price action will not break that plane in the immediate future. Okay. Eventually, perhaps, we might see some kind of reversal on Monday. I think the likelihood's pretty low, but that could happen. Just based on the price point being so low, and a lot of folks are going to kind of add to their position at 27,000 or 28,000. So just keep that in mind. We're underneath the key level resistance. Another thing we can also acknowledge too is the fact that the price is kind of sticking within the range of Fibonacci. So it came down all the way down to the lowest point here, roughly at about 27,000. Again, I'm using ballparks there. It's more like 26.8, but 27,000 is kind of a good round number to kind of easy to remember. And it basically just tells us that when we got those wicks down here, you can tell the price action was not willing to go any lower than that point. So essentially what you see here is a very positive sign in the sense that the price is unwilling to go lower, especially when you see this increased amount of volume. That does help us understand that we shouldn't expect the price to go lower than where it's at for the moment. And when I say for the moment, that's probably a pretty short moment, but it does look like it's fairly over-exhausted. Let's go ahead and take a look at TD sequential and see. We can see we hit a 9 just before this most recent dip last night, and of course a recovery here today. So generally speaking, we're absolutely overextended, and that's really telling us a lot in the sense that we shouldn't, again, the laws of trading are never truly 100%. There's no guarantees in anything, right? But the probabilities are higher in certain circumstances. And right now, the probability of price going lower is very low due to the simple fact that we've been pushed to the downside for so long, and it's literally been, again, 6 straight days of downside. There's going to be a point in which we need to have some rest and relaxation. So just kind of letting you know that I don't feel like we're going to see a shot straight down based on this candle that's forming right now. This looks very good, but it's also, of course, a terrible situation because we're stuck underneath the key level resistance now, and that support level is gone. Okay, so 28.6 is a new resistance. Maybe try to remember that one. Okay, let's take a look at the 1 hour, kind of wrap it up here. Essentially what we're looking at, see if there's any other things here we can identify. We saw, and I mentioned this yesterday, we see 2 9s in a row. Traditionally speaking, the price should consolidate or increase, but it didn't. It came over and down. So a lot of that fear, uncertainty, and doubt seeping in, and that has a tendency of causing these severe reactions. So yes, we should have seen a reversal at about 28,000 or 28.4, but instead we saw this strong push to the downside, followed by a potential increase here in the last couple of hours. Now a lot of shorts just got closed, of course, with this little push here. So generally speaking, this is a positive sign, kind of showing us that shorts may be a little more timid for the moment, but honestly, that really doesn't matter. The truth of the matter here is that the price is moving down, and we need to acknowledge that. Okay, it'll always continue to try to increase, but until we can start making higher lows and higher highs, there's really no leg to stand on, and we've only been making lower lows and lower highs for literally 6 days straight. So it's been kind of a crap show. There's a lot of other words you can use to describe it, but it's pretty much very nonsensical in a lot of ways because the price should increase from here. But with everything going on in the world, that's really factoring in a lot. So again, even though we saw 5 weekends in a row, with Saturday and Sunday were green profitable weekends, and then of course Monday is a take profit day for most whales, we could see the inverse here where we might actually see an increase tomorrow, depending on the overall climate. and of course, red days today. Another thing to point out as well, and this is interesting, we haven't seen this for quite some time. Traditionally, you can kind of look at the map and you can see there is, every Saturday is low volume, every Saturday and Sunday. But look at today and yesterday. That is a significant amount of volume based on being a weekend. So it's really unusual to see that, but it's just that change of pace. It's that current climate that we're in where, whales, industry leaders, retailers, they're all pushing the price action down. I know it's not folks like you and I. I mean, majority of us are holding, right? So obviously it's the big players, the big whales that are taking their profits and just pushing the price action super low because they want to average their price down, right? That makes perfect sense. They're going to sell, the price comes down, they buy the dip and continue to rinse and repeat that and just get rich off of it. So that's basically what's happening, but the increased volume really tells us a lot in the sense that this is a pretty strong push, and the fundamental catalyst that we had here essentially with CPI data being higher than expected is causing this to occur. So I believe a majority of this is mostly just based on that fear, uncertainty, and doubt. Pay attention to how the market opens tomorrow. If there's a gap down from traditional markets like we saw on Friday, then it's going to be one of those situations where we're going to see the price continue to go lower. But if we're to see the price just kind of go sideways from here, for example, or perhaps even increase, or maybe even just say gap up a little bit, then we might have a better leg to stand on. Because again, this overall general market here that we're in, the traditional market does factor a lot into it. And with this just kind of dropping like it's hot, we can see, of course, ever since December, big coincidence, Bitcoin's been falling since late November. This is it right here. Okay, so the highest point in which NASDAQ went is very close to the highest point in which Bitcoin went, and now it's coming back down. So again, just some things to kind of pay attention to. Really, honestly, the next steps here, I would say, in the best practice right now is to kind of stay on the sidelines. That's kind of what we're doing here. Thankfully, we had some nice short positions open from the week, and maybe even a couple weeks ago too. We actually got one that just closed, or we just hit take profit number 3, and that was like 24 days ago. Okay, so again, there's definitely some benefits of structuring your trades effectively, and that's what we do in our community. But for right now, the best trade is no trade. That's just kind of my personal feeling on the way that things are right now. It's a really crazy, chaotic world that we're in right now, and we need to recognize that this is going to continue to be just very, very ridiculous, for lack of better terms. Because to me, honestly, it shouldn't have came this low, but it is, right? And that's just what the technical analysis is telling us. But right now, this is mostly fundamentals, because if you see any history for Bitcoin, Saturdays and Sundays are low volume and traditionally green. We're seeing high volume followed by red. So that does imply we could see a reversal tomorrow, potentially to the upside, based on the simple sentiment that Bitcoin does what you think it's not going to do. It's like, okay, I'm going to do the exact opposite of what seems logical, and I'll take my profits. That's essentially what's going on here. So anyways, I hope that made sense and I'm clarifying correctly, but generally speaking, be very cautious if you take a position. Small position sizes, if you're going to use leverage or spot, even still, we're using smaller position sizes in my community too. And it's just kind of a good practice to be in right now, because if you can dollar cost average and add to your position over the course of the last 7 months, like we have, majority of people have, in 6 to 12, 18 months, whatever Bitcoin pulls its head out of its ass, we will effectively have a very strong return on investment. For that plus altcoins as well. But just be very cautious in adding to your positions right now. I would add lightly, maybe set some targets for 24,000 would be a good starting point. I have limit orders at 24 and 25,000. So I might recommend something along those lines, just to ensure you kind of get filled with larger position sizes, but between now and then maybe add a little bit at a time. But don't get too ahead of yourself. Do not revenge trade. These are all things I like to teach in my trading academy. Be sure to check that out if you haven't already. Once again, CryptoCache.tech. I hope that you learned something here today. If so, comment below. If not, that's okay too. We'll look forward to seeing you in the next video. Have yourself a great rest of your day. Thanks again for your time.